But thanks for joining, everyone. We're here for another webinar. We've been doing these every other week, and today is focused on financial managers and RIAs that are partnering with us to invest in some of our deals. And we have Eric, who's my co-presenter, who's been with us from almost the start, and he's done a few deals with us, and his clients have invested in almost every one of our deals. So I'll give you a little background on Neutral, and then Eric will get into kind of the more RA partnership strategy. And then we'll get into our current deal that we're raising capital for that will close at the end of this year. And then also pipeline projects that we have coming in 2026 and also 2027. And we'll after Eric's section, we'll have a little brief kind of Q&A for Eric. And then after my section with Edison and pipeline, we'll have a longer Q&A. So we're excited to have you here, and thanks for coming. Just to give you background on Neutral, we started in 2020, and the focus of the firm is to reduce carbon emissions in the built environment and use mass timber as our primary structural material to do so. And to date, we have 6 projects. 3 are in construction, 3 are under development. The first one that we started with was Baker's Place, which is the one you see there in the middle. And that was the first one that Eric and his clients invested on. Then the next one we had was the Bloom, which we sold, entitled the land and then sold it. Then the next one we had is 519 and 521. And that was kind of around the same time that we also started the Edison. And so those 2 have been running kind of concurrently. And then our next 2 big projects are Marcus Center, which is right across the street from the Edison, and then 321 South Duncan in Fayetteville, Arkansas. And you might ask why we're going to Arkansas. One big reason is Walmart, but we also really like the Northwest Arkansas region. We just see a lot of really good rental growth there and a lot of great occupancy numbers. And so that's an area of the country that we're going to start expanding into and have a few more pipeline deals down there. So our 2 main markets right now are Madison, Milwaukee, and then Fayetteville is kind of this new market that we'll be digging more into in the next 2 to 3 years. So just to give you a little idea of Neutral. So Neutral is the development and holding company, and then we have 4 subsidiaries. So we do all of our own design and architecture in-house. We do all of our own investment kind of management and capital markets management in-house. And then we have a little carpentry division that we do specialty carpentry for. And then we partner with USDA for research and development at Neutral Lab. And so really what we're looking at is just a holistic kind of overview of a design build company that allows us to really control almost every segment of the development process in-house. The team that does that is here in front of you. So I'm CEO. Daniel is our CPO. He's a recovering architect, was an architect for almost 40 years and is now our CPO. And then Matt is our Chief Technology Officer. He started a technology firm about 20 years ago, sold it, and is now our CTO. And then Sabir is our controller and kind of the guy behind all the numbers. So that's our leadership team. And then we break into 2 houses. One is product and development, which they focus on architecture, engineering, and development. And then the other is capital markets, who you would be working with on the investment side of things. Our capital markets team is more kind of frontward facing. And then our financial team is more kind of back office and accounting. So the other thing that we have, which is really cool, is we built out our own software in-house that allows investors to track their investment all through our app. What it also allows investment advisors to do is look at all their clients' capital in one spot. So we do have an integration with Charles Schwab that allows you to see the investment on Charles Schwab, but you can't always get all the information you might want if you really want to get into the granular numbers. And so what our platform allows you to do is you're able to log in and see every single client's investment and look into, hey, what's the latest construction update? What are leases doing? What's occupancy doing? How is absorption going with a new lease up? Things like that. So this is kind of your one-stop shop to get reporting and also get an update for the project. And I think that's one benefit that we see, which I know Eric is going to talk about, But for RIAs, we really believe that what some clients want is these kind of more private equity active investments that they're able to go touch and feel, especially if they're local. And so this gives the investment advisors an opportunity to stay updated and understand where the construction progress is at, or where the lease-up progress is at, or just where the overall project's at, and be able to report back to their clients and kind of provide that lifetime update for their clients. Okay, so just to give you an idea of kind of the project overview and where the investment is actually going, the current investment opportunity that we have is called the Edison, which is right downtown Milwaukee. If you're familiar with kind of Pfizer Forum and the Deer districts, we're right across the street from that. And so this is the project we're currently raising capital for, which we have currently about 30 million that we need of about 60 million total of client capital that we need. The project size is 32 stories, 383 units. Right now we have the site fully entitled. We already started doing some construction on site. We demoed the existing building and have started to repair the dock wall because there's a really nice river walk in front of the site. And then we started with test piles just last month. And so the goal is for us to have full construction start by December of this year, and then for us to be finished by spring of 2027. And just to give you an idea of kind of where rental rates are at for the project, right now studios were in the 1900s, one beds were in the high 2000s, and then two beds were in the 4000s, which is kind of right in line with where we're seeing kind of luxury high rise in downtown Milwaukee. We have a few other competitors that we've comped out, and they're right in the range of these rental rates. So these are just a few vignettes of the project. We have this really nice pedestrian bridge that leads into Pfizer Forum and then leads into a park right next to the project. And the park we actually have on a 100-year lease from the city of Milwaukee. And I think it's actually a really kind of unique feature of the project, because in larger downtown environments like Milwaukee or Chicago, you rarely get to be able to have a park right next to a luxury high-rise tower. So it will act as a nice amenity. It also leads into what is now the new Riverwalk in downtown Milwaukee that takes you all the way down to Third Ward. So these are just another few vignettes. This is the entrance and the lobby here. And then we have our full amenity deck on level 8. And then we have residential above that. One of the things that we do for all of our projects is we partner up with a firm called PK Fitness. It's Peter Kraus Fitness. He's a local Madison fitness gym. They have 6 gyms in Madison, and they'll be operating our gym here in Milwaukee and are operating our gyms in Madison as well. But it's a nice amenity for tenants because they get a free gym as part of their living experience. And we see that as a huge kind of value, because most of the time, a lot of people living in these luxury high-rise apartment buildings, they're paying for a gym membership somewhere else. And typically it's $150 to $200 a month. And so if they can have a comparable experience in the building and have it included in their base rent, they see that as a big value add. So that's why we partnered up with Peter to run the gyms and run it more like a third-party facility. And then on the 32nd floor, we have a Sky Lounge, which will have a golf simulator, a bar, a chef's kitchen, and then an open area for community spaces and parties and events and stuff like that. So just to give you an idea of where the site's located, to get your bearings, City Hall is right here, downtown Milwaukee. You have Pfizer Forum across the river, where obviously that holds a lot of events. That's where the Bucks play as well. And so this whole district is kind of a new F&B and events district for Milwaukee. We're right across the street. You kind of see this dotted line. That's the pedestrian bridge that walks you right into our site. And our site's right here. One of the interesting things is this, where you see the parking structure identified. That is actually Marcus parking garage, which we just got awarded by the city. So the city owns this whole block, and we just got awarded it to develop it. And so that will be one of our pipeline projects we talk about, but that will be kind of phase 2 of the Edison once the Edison is built and absorbed. So it's not just us. We do partner with others, and one of our best partners and very close relationships that we have is C.D. Smith Construction. They're a firm that has been around for over 70 years. They're based in Fond du Lac, but have offices in Milwaukee and Madison. And they built the tower you see here on the right, which is also in Milwaukee, called the Ascent, which is currently the tallest mass timber building in the world. We will surpass that once the Edison is finished. But they built that. They also self-performed all the mass timber, which was really one of the critical reasons why we wanted to pick them, because really when you're selecting a GC, you want to make sure they have some comfort level and familiarity with the material that we're building with. And so mass timber is somewhat of a unique material and a new material to the construction space. And so we wanted to make sure that they had experience doing a building and learning the lessons on someone else's project instead of ours. And so they built the Baker's Place for us in Madison, which has gone extremely well. And now we're building the Edison in Milwaukee. They also did Northwestern Mutual's campus and 777 for Hines. HPA is our architect. So for our bigger projects, we don't do the architecture in-house. We only do that for our smaller projects. We manage the architect, but for liability reasons, we outsource that. So HPA is an architect from Chicago. They just finished up this beautiful building on the right called One Chicago, which is probably the tallest luxury high-rise tower that's been built for quite some time in downtown Chicago. And now they're working on our project. They also have a lot of familiarity with mass timber, as they have built T3 for Hines in Atlanta and a few other cities. And then Thornton Tomasetti is our engineer, and they also have a lot of familiarity with mass timber. They were the engineer of record for the Ascent, and are the engineer of record for our project, the Edison. So just to give you some context on why Milwaukee and why mass timber. So one of the studies we did, we looked at some other luxury buildings in other markets that have built mass timber projects, Milwaukee being one of them, Cleveland being another, and Portland being another. And we just looked at, on a comparable level, does mass timber demand a premium just for rent? This doesn't look at, does it demand a premium for sale value or other things, but just for rental premium. And what we found is on average, it's 8.2% premium that it adds to a project, which is huge. And so for us, that's one of the big kind of value adds that we see outside of the sustainability factors and biophilic factors that you receive from mass timber buildings. We see this kind of great financial aspect that mass timber buildings demand a financial premium. So the other thing that we do for all of our projects is we hire the Concord Group, which is one of the top 3 market study firms in the country right now, and they do a competitive market analysis for our projects. And so the Edison, they did a big market study for, and one of the interesting things that they found was if you look at kind of Metro Milwaukee as a whole, it's at 0.2% growth. So it's relatively flat, which I think is kind of the common narrative that you hear throughout Wisconsin. But if you look at downtown and the competitive market area, which you see on your screen here on the right, we're on average at 2% growth. But in our specific submarket, which is Easttown Juneau, we're at 3.1% growth. And on average, the people coming into downtown Milwaukee are making $100,000 or more, which is kind of our renter demographic and profile. So as a whole, Milwaukee is kind of flat population growth. It's relatively stagnant, but downtown has huge population growth, especially for a downtown of this size. And so that's one of the big reasons why we are bullish on downtown Milwaukee and believe that it is going to be a great investment to put 383 units right downtown. Some of the reasons why this is occurring is you see all the companies here on the right, Milwaukee Tool being one of the big ones, Pfizer being another one, Northwestern Mutual being another one, are all moving back downtown. So what we kind of saw post-World War II and into the 60s and 70s is this urbanization and sprawl into the suburbs, which wasn't great for downtowns, especially downtowns like Milwaukee. And what we've seen recently within the last 10 years is a lot of these companies are moving their campuses back downtown because their employment demographic want to work downtown. And so we've seen, especially Milwaukee, this kind of mass migration from the suburbs, like Pfizer had a huge office in Brookfield. They've moved that back downtown Milwaukee. Same thing with Northwestern Mutual. And so we think we're going to continue to see that. And what that means is that more and more people are going to start living downtown instead of in the suburbs. Or these people that are getting hired by companies like Pfizer or Right Height, they're going to be moving to downtown because they want to live close to work. And so that's another reason why we're really bullish on Milwaukee. So this kind of leads us to our market fundamental study that we look at for every project. And it looks at basically what is the occupancy going to be from now until we open. And so you see that chart here on the right. Currently, we're at 95.1%. But if you look at how it trends up to 97.2% by 2028. And part of the reason for that is right now, Milwaukee has two other towers that just got delivered. One is 330 units. The other is almost 400 units that are currently being absorbed, which will likely be absorbed through 2025 and maybe a little bit into 26. But then in 27 and 28, there's really not that much in the pipeline for downtown Milwaukee that's being built outside of the Edison. So it's kind of this perfect storm of where interest rates are at and where the economy's at. It's hard for projects to get in the ground. But if you can get in the ground, you will definitely get your units absorbed. The other thing is that we typically underwrite 3% annual rent growth, which we are doing right now for the Edison, but we're projected to be at 4%. So if we stay to those projections, then we will outpace what we have underwritten. The last fact is that 79% of the downtown competitive market area, the submarket, is renter population. So that's a great stat for us that most of those people living there are not owners, but renters. Just kind of another nice map here, a visual of where the Edison is located relative to other businesses in downtown Milwaukee. The closest to being Pfizer and Northwestern Mutual, but Milwaukee Tool is also not far. And then, if you're familiar with Milwaukee, this whole area in downtown is really the kind of core central business district. So all the banks, BMO, Wells Fargo, Chase are all right there with their headquarters right downtown. So the other thing we look at is a absorption study, looking at what is the supply coming in the pipeline in the next 5 years versus what is the demand. And for the demand, we are only looking at what we deem a qualified renter, which means they have to make 30% of our average rent. So that puts someone right in that around $80,000 range for what they have to make per year to qualify as a potential renter. So if you look at those, that's how we make up our demand. Each year we have about 710. You see here is 593. That's just because we did the study a little less than halfway into 2024. And so each year you see 710. These 2 years here, the reason why those have heavy supply is because of those towers being delivered right downtown. But then into 26, 27, 28, there's really a huge supply cliff, but demand is staying constant. And one of the reasons demand is staying constant is some of those employers I talked about, they are not opening their campuses until 26 or 27. And so what we're looking at is basically when we open in 27, there's already 226 units that we have undersupplied. And there's going to be another 564 that will be under supply in 2028. So there's plenty of demand for us to build 383 units. So this is just our comps, looking at kind of the 3 or 4 other buildings right downtown that we feel like are very competitive for kind of our class of building. If you look at the Ascent, which is probably the most competitive, and on a chunk rent basis, they're about $500 more than us. 333 is over $700 more than us. And then Couture, which has some larger units, is only $300 more than us. So on a chunk basis, we are kind of right at the brink of luxury as far as rental rates, but at the low end versus the peer set. Okay, getting into financial summary for our project. So our capital stacks typically almost always look like something like what you see here on your screen, where we have a senior loan coming in at around 45 to 50%. We'll have a mezz tranche at around 17, sometimes getting up in the 20% range. And then we always put in about 30 to 35% equity. And the reason we do that is just to not get over leveraged on deals and to be able to have a little bit less risk when it comes to if something were to go wrong, or if we needed to potentially just hold the project a little bit longer. We don't have this large debt service that we have to pay if we were to leverage up to, let's just say 80% or 85% like other developers. So within that equity pool that I'm talking about, we typically separate it into what is neutral, which is us and our partners doing, versus what are the investors doing. And we're always putting in between 2.5 to 5%. On Edison, we're putting in more just because we really like the project, we like the market, and we think it's going to do well. Sometimes we'll do less. That doesn't mean we don't like the project. It just kind of is where the company's at with capital constraints. As far as the equity investors, they're at just about 30% at $60 million. And the minimum investment for an equity investor is $25,000. Our biggest investment to date has been all the way up to $14 million, and it's pretty much anything in between. So wherever your clients are at, we can work with them on bigger, small scale. So just to give you an idea of kind of the hold period, for investors, it's 5 years. At 5 years, we all have a vote. And so basically what the vote says is if 51% say we want to list this project, then we list the project. If 51% say we don't, then we have another vote in 2 years from then. And we basically have that same vote every 2 years. So every 2 years, if we don't sell the project, we have a vote with all the members that say, hey, do we want to sell or do we want to stay in? And that's nothing, it is in person, but you don't have to come in person. You can just submit via DocuSign. Currently, we're performing a 17.9% IRR, and we're also performing a 2.1x equity multiple. The other thing to mention is that there's a 10% preferred return for investors. So what that means is basically we as the sponsor, we don't see our return and our split until the investors get their 10%. So once the investors get their 10%, then we split all cash flows 75-25, 25 going to sponsor, 75 going to investor. And then it's basically pari passu thereafter. We also have some promissory note offerings. And the promissory notes that we have are 10% simple interest if you do less than $250, paid on a quarterly basis for 4 years. And the other one is if you do more than $250, then you just get a bump 12%. And those are really, I think, kind of just a opportunity for your clients to have some private credit within real estate. So last thing to mention here is that we look at kind of from a tax perspective, how can we optimize the investment for our investors and make sure that they're leveraging the benefits of real estate to the best possible degree. And a few things that we do are we almost always try to get this Section 45L New Energy Efficiency Home Credit, which is $2,500 for sure that we get, and we're seeking $5,000 potentially per dwelling unit. So that's times 383 units. So it's relatively a big credit. The next one is Section 48. That's for a geothermal system. So it's pretty cool. Out in Edison, we're using a geothermal system. We actually drive these huge rods into the ground, and we use the river water right next to the site to cool the building. And then we're using steam from the excess power from We Energies to heat the building. And that qualifies us for the geothermal energy property tax credit, which is up to 30% of the total system and 10% if we source it locally. And then the last one is 179D, which is an energy efficiency credit or deduction, and that one is $5.65 per square foot. So what our accountants did, which our accountants are BDO, we have our internal accounting team, but for taxes and for anything reporting wise, we go through BDO, is they basically just did a quick kind of analysis to see what would this mean per investor on a $100,000 equity basis. And what we found is it's $4,912 per equity unit. So basically 5% for investors on the tax credit side, which the tax credit, our understanding of that is that a credit can be reduced dollar for dollar with actual taxes owed to the federal government. Again, these are all federal government credits and deductions, not state. And so that's a dollar for dollar. So if your client has, let's just say, $10,000 of taxes that they owe the federal government, it would now become roughly $5,000 after they receive this credit. The deduction, that just takes basically off your taxable amount. So if you have $100,000 income in that year and you have $62,000 of deduction, as long as it's qualifying, you'll be able to deduct $62,000. And so the deduction is $62,000 that we are getting per $100,000. So with real estate, there's a lot of great tax benefits that the clients will have opportunities into, which is definitely something to consider as you go through estate planning and tax planning. Just to give you an idea of our project pipeline, we have one project that will break ground later this year as well in Madison called 519 West Main. It's a smaller project, only 33 multifamily units. We have a little bit left here, but most of it's taken. I think we have about $800,000 left before we're fully subscribed. And then our next big project after Edison is this multi-phase Marcus Center redevelopment, which this is Edison here with the red bottom and green roof. And then right across the street is Marcus Center, which we just got awarded from the city of Milwaukee. So that's kind of our pipeline deal. Going back, I think Eric's back on, so we'll let Eric finish up and then we'll open it up for Q&A. Dan is wondering if there's a possibility for us to sell the tax credit. And there is a possibility for us to sell the 48, is our understanding, which is the geothermal tax credit. The 45L, there's not a possibility to sell that credit right now. There is legislation that's been proposed that is proposing a basically opportunity for you to sell that credit, but currently it's not, there's no capability to sell it. The Section 48 there is, but we're not going to sell it just because there's been a lot of investors that have been intrigued to receive that credit once the project is placed in service, which will be 2027. And we also want it since we're equity investors, we also want it for our own sake. So in the future, we might look at that, but for Edison, we're going to keep it and distribute it to all the investors. So with that, I'll hand it over to Eric.
Yeah, I'll just make sure that Nate give you a little bit of background for those that don't know me on this call. Is that I worked for New York Life for 20 years, and 6 years ago went independent and decided that I could build a better mousetrap. And it's been much greater, a lot more fun. But anyway, and one of the biggest things I wanted to do to be different than anybody else was, have different investments. One of the things I'm like, I'm a certified financial planner, and I was actually talking to a friend of mine. He's like, what are you going to do to make it so you're different than everybody else? I'm like, well, I'm a CFP. And they're like, yeah, more and more people are getting a CFP, which is true. Being independent, that's also, helps. But that's where I kind of came into real estate. And I've been doing real estate with my clients literally for 5.5 years out of the 6 years that I've been independent. And there's a lot of different advantages to it, but I'll get into that in just a second. So what I'd like to do today is kind of give best practices, because when I first started raising money, took me a year to raise $6 million for our first project. And so, but after that, it takes a couple of months to raise a few $1 million, maybe $3 to $5 million. So once your clients get to understand it, or even people that it's such an easier process. And so the first thing that I did was I made 2 lists. You got to have all accredited investors. So I started with all my clients, and I listed out all the accredited investors, and then I went to people that I would run into. And that list was about 120 people 6 years ago. And anybody and everyone that I knew that made over the $300,000 as a household income with 2 people, or $200,000 with 1, or have $1 million net worth, excluding the residents, I just put them in that. I'm just going to put this in here, and now I have a list of about 250 between the 2 of them. So what's nice is that this has given me the ability to talk to a lot of people that normally, I have a financial advisor, I already have one, not going to talk to. But when you start talking to them, they're like, "But what do you do?" I was like, "Oh, I'm a financial advisor, but also raise money for real estate. And we're doing this project." And they're like, "Oh, really?" And so it's a way to have conversations with people that you would never be able to gather any capital from. And so when I look at the last $4 million that I raised, $3 million of it was from assets that was either in cash that I went to put in the market, or that was from individual investors that are not my clients. So it's just, it has helped tremendously open up my clientele base. And I've actually gotten a half a dozen to a dozen different clients, because after a while, they're like, "Oh, wow, you do this. Would you mind looking at the rest of my stuff?" So it does lead into those conversations. So it's really cool, because you're going to be completely different than everybody on the planet. There's a lot of reasons why I have clients invest in real estate moving forward. One of the reasons is that it's very, very low correlation to the stock market. I think modern portfolio theory is kind of old school. When you look at what really runs the markets, you look at international, does that really provide diversification, or does it provide correlation at different return levels? The S&P 500 and the international markets are now, I believe the number is 88 or 85, let's be conservative, 80 to 85% correlated to each other. So back in 2000, the dot-com era was actually the only time where the international markets went up, U.S. markets went down. Other than that, they're highly correlated. So when I do a portfolio, I want to find true diversification. Looking at private debt, private investments. There's all sorts of different things that, of course, Schwab offers, but I really like brick and mortar, because it's a way to increase returns. And in private markets, it was where real wealth is made. It's not in the public markets, unless you get lucky with a stock like NVIDIA, over the last, 2 years. But private markets is where wealth is developed, where wealth is gained. So, a perfect example is the last 2 weeks, the markets have been all over the place. And so, when you're talking to people, the projects that we have in play right now, they have not moved at all, right? They're very, very stable. And so it's a completely different discussion. And to be honest, all of my reviews, I would say 80% of my conversations now are based on real estate. How is it doing? Can you show me pictures? It's really nice to be able to have those conversations instead of like, okay, what's going on in the markets? What's their portfolio? They kind of roll their eyes a lot of times. So it's just a way to, I think, add a little bit more excitement to the reviews. And the cool part is that, you can log in on the app, or you can get quarterly updates. I get quarterly updates and I share them with our investors. And that also brings out different conversations, which is really nice. But for them to see something that they can drive by if you're close to the area is really cool. Or if, they get these updates, they don't have any other company that gives so much detail on what their investment is actually doing. And the people love that. So that's really cool. The other part, you can use IRA money for these projects, which is also neat. Of course, you can see that I'm not going to just go through all these, but tax benefits, inflation hedge. But on the flip side, you have clients where they're sitting on a wad of cash and they're like, I don't want to invest more in the stock market. And you get that. So, bringing these other types of investments are awesome. And they are on the Schwab platform. But now you can go to them and say, hey, so to make this is how I explain the tax advantages on the project, on the Edison. If you invest $100,000, you're going to get, and you don't have any other passive type of taxes, any sort of capital gains, anything like that, you're going to get that credit in 2027. And then when we sell the project, it's going to be in 2020, 2030, 2029, somewhere around there, probably around 2030. If you're assuming you don't have any other taxes due on passive income, you're going to get those credits at that time. So you get the $66,000 worth of deductions, and then you get a $4,900 credit. So if you do the math on it, it's roughly about $20,000, depending on your tax bracket, $20,000 worth of capital gains. You have to pay roughly 20%. That's $4,000 of taxes. So if you add those two together, you're getting about $86,000 to $88,000 in deductions against any growth. So if we look at this, you get 100,000 and you invest it, and in 5 years we hit the numbers. It's worth 210. So you have $110,000 worth of gain. On any other investment on the planet, you're going to pay capital gains tax, both state and federal. On this project, you're going to get between $80,000 and $90,000 worth of deductions. So you're literally on the conservative side. You're going to pay capital gains tax on $30,000 worth of gain. That's it. So on a $110,000 gain, you're going to pay, let's say, $6,000 or $7,000 in taxes plus state. That alone, plus, you look at all the research that the Neutral Project does. You have access to them. You have access to me. You can get as much information as you want. You can drive out. There's no other investment on the Schwab platform that allows you to do that. And so doing your due diligence, obviously why you have this conversation right now, but there are a lot of different real estate companies all over. Every city has them, right? So, but the reason why I like the Neutral Project, built a relationship with them. I get to see them every day if I wanted to, but on a weekly, monthly basis for sure. And I get to see the projects, but also, which was really important to me, is because the question that I get often is, Eric, how much are you going to invest in this project? And so you have to have an answer. He's like, oh, you know what? Such a great project. I'm not going to invest anything. So that's kind of my same process of, with the Neutral Project. They're investing $10 million. Why, in my opinion, why is that a little higher this year? Because guess what? If that 10 million turns into 20 million or 21 million, and they get $800,000, $8 million worth of tax credits or deductions, that's a pretty awesome investment. So that's why I put money into projects. That's why I have clients put the money in, because of all of those things. And I can have more individual conversations if anybody needs it. But those were the really big things that I wanted to cover. One, you get to talk to people that you never would be able to by offering these projects. Your quarterly reviews are much more in depth. They're a lot of times focused on these projects versus how the market is doing, because the market will do what it's going to do, or you can spend it on planning and how by having this asset class, you're going to have a lot of growth. And that's why we complement it with maybe private debt or things that offer a high dividend or high yield. So I don't need to get into all the detail, but those are all the reasons why I've chosen to do this and work with Neutral Project, and obviously share it with everybody on here. So how to invest? It's not too bad. Of course, I have my office manager. She does this, but essentially, my glasses on. So the advisor and investor basically complete the custody letter of authorization. It's just a DocuSign that you both fill out. Then the investor, of course, has to fill out all the subscription documents. That goes over to Charles Schwab. Then the money is in their account. And then based on all the paperwork, Schwab will actually wire the funds directly to Neutral Project. And then Neutral Project will say that they received it. So we've done this. And for anybody that has questions, you can always reach out to us, and Nate, after the fact, he's going to send you all the forms that are needed. But it can be overwhelming. We've done it. So just give us a call or shoot us an email, and Paula or Monica can actually walk you through that process, just so you get the first one or two down. The IRA is a little bit different, not much, but both are pretty cool. So, and to make one thing very clear, if somebody invests into the project with an IRA, obviously they do not get the tax credit. So sometimes having an after-tax investment is a little bit better on the Edison, but of course you can use both. So,
Eric, the other thing to mention is when we started, Eric didn't have any of this, and so he was working with us and bearing with us on going through all the PPMs and subscription agreements and everything, basically just via email. Now we have a very systematized approach, one through our investor portal, but now we have this SSID number with Charles Schwab, which took a long time. It was a very painstaking process. They had to basically review the full PPM, review all the legal agreements. Once a year, Charles Schwab will have a third-party audit the entity and the books to make sure that we stay in compliance with their requirements. And then they basically allow the investors to put this on their platform. So your clients will be able to view this as a position, just like any other position in their portal, which gives you the ability to kind of continue to manage that account, continue to charge your assets under management fee on that money and be able to kind of keep it just like any other investment instead of kind of quote unquote selling it away into a third party private equity position. So we see that as a really big value add now that we're listed on Schwab, and we will plan to keep all of our future projects listed on Schwab to make it that much easier for the advisors. I think David had one question, which we can answer quickly. When do you anticipate the Edison being fully funded and closed? And when do you expect starting funding for the next project? So to answer the first question, David, the Edison, right now we will have to be fully funded by the end of the year because we've already placed our deposits with Bank OZK and ProMark and are working through the loan agreements. And so they want to be closed before December 30th just to make sure it's in the 2024 books for them. And we've already started kind of all of our preliminary construction activities to make sure we stay on schedule for that early spring 2027 opening for the Edison. And then for our next project, 519, that's closing this fall, and we'll be rolling on that through August of next year, and then that will be done. And then subsequently for Marcus Center, we will start going out to raise capital for that one around this time next year, maybe a little bit later, just depending on how quickly entitlements go. And then we'll be closing that one sometime in 2026, likely towards Q3 or Q4 of 2026. We also have one more project down in Fayetteville, Arkansas, that I mentioned before that will be coming online for investment opportunities early next year and closing by the end of next year. So our goal is that every year we have a new opportunity for the advisors so that if they have clients that are interested, they're able to allocate, and then we're able to kind of form these long-term partnerships with our advisors. We will send a follow-up email, which is some more information along with that checklist that Eric referenced in regards to how you actually allocate client capital through Charles Schwab. And then we will also be posting this webinar and a white paper in about a week and a half for you to review or send to others. So thank you so much for joining today, and we appreciate you being on the call. Thanks, Eric.
Thanks, everyone. Take care.